Welcome back. So now we're going to talk about different kinds of nonprofit corporations. Now there are two kinds. There's the 501c3 that comes from our tax code. That's the public charity, and the 501c4, also known as a social welfare organization. So those are the two kinds that we normally see. These are corporations that must serve a civic, educational, charitable, or religious purpose. And they must pass an organizational test, and they must have a board of directors. Especially for that organizational test, see your lawyer. Okay? You must have a board of directors. That's non-negotiable. Okay? And that kind of prevents corruption in theory, right? Now, the bad thing about the nonprofit corporation is the fact that it cannot seek other forms of funding. So you can't get like a bank loan, you can't sell shares or whatever. But what you can do is seek you can seek tax-deductible donations. So let's give an example of like Goodwill or Goodwill Industries. That's a very large charity in the United States. You can drop off like, I don't know, let's say I don't like this book or something, and I can drop that off, and I can tell them this book is worth $20, and they say, okay, and they give me a receipt for that, and then I can claim a tax deduction. And then they'll take that book that I gave them, and they will sell it in their in their thrift shop, and that's how they raise money. That's what a charity and a social welfare organization can do, and that's how they raise a lot of their money. Now there's some others like Homeboy Industries that we've talked about, that have social enterprises and some other variants. But that's the main idea behind the 501c3 and 501c4. That's the main difference. And again, if you're trying to go into business, this is the wrong organizational form for you. This is when you're actually trying to serve some sort of a greater good. Now a similar kind of analogous thing is the B Corp. And the B Corp is designed to solve social or environmental problems. Okay? Has crazy accountability standards that go with it. Again, you need a really good accountant and a really, really good lawyer if you're going to take this route. And they do something called B impact reporting, which normally is associated with a triple bottom line: social, financial, and environmental impact. Okay? And what makes it kind of scary if you're trying to start a B Corp is the shareholders can actually sue if the B Corp falls short of its goals. In other words, of maintaining like social and environmental prerogatives. And you have to adhere to this mission that you've stated, even in the face of financial difficulty. So you can't say like, we're going to help the environment this year, but this other year, we were kind of like deficient there, so therefore, we weren't as environmentally friendly. No, you can't do that. You have to adhere to the mission first, to the finances second. So that can really impede your profitability, your growth, etc. But that's something you have to do. Now the good thing about the B Corp, you can fend off hostile takeovers, because if an outside corporation wants to try to buy you, they have to also support that B Corp mission. And most kinds of companies that are in acquisition mode are going to be reticent to buy a company that has these very, very strict standards that don't even prioritize profitability to the same extent that they do social and environmental goals. Another good thing about the B Corp is because you are so focused on these social and environmental goals, you can retain talented employees, and you can also get a boost in your profitability from the brand. A lot of organizations in this category, like Patagonia and some of these others, people buy the product specifically because they like the brand. It's also like Homeboy Industries that we've talked about too on this channel. People buy Father Boyle's products or Homeboy Industries products because they like what the mission represents, and that gives them a very unique competitive advantage. Okay. And the last one is so short that I didn't want to make a separate video about it. It's different from the B Corp and the 501c3 and the 501c4, and that's the professional corporation. You sometimes see PC after this. And this is for organizations that offer professional services. Good examples are doctors, lawyers, dentists, people that need a license to practice. It does not protect from individual malpractice, but it does protect from joint malpractice. So in other words, let's say that I'm a dentist and I'm an idiot and I accidentally pull out someone's tooth or something like that. I, the idiot dentist, can get sued, but my partners in the professional corporation don't get sued for my mistakes. I'm the only one that's liable for that. Okay. By the same token, let's say my partner is an idiot and pulls out someone's tooth, he or she gets sued, not me. That's the professional corporation. Well, this wraps up our discussion of organizational forms. I hope you enjoyed this discussion. And as always, hit that thumbs up if you like this video, or this playlist in general. Please hit the subscribe button. I'm always hungry for subscribers. And comment down below if you have any questions. I'm looking forward to seeing you in the next video. Or next playlist, actually. Thanks for watching.